Yeah, yeah. I'm back again, guys. I want to give you one gist this morning. It's a very, very important one. Many of you have been trading blindly. There are many things you need to see that you don't see, probably because you don't know. I'm going to reveal them to you right away. This morning, I want to talk to you on how I use RSI to determine a strong impulse. From elementary trading, you have been taught that anytime you see an impulse, you need to look for correction and then you see another impulse. All right. And I also want to believe that you were told or you were taught that don't trade this impulse. After the next correction, you trade this impulse. Okay. This impulse tradable, this one not tradable. So this is an action, okay? This is a correction, and this is a reaction from you. You are reacting this way because market acted this way. So for every action from the market, you wait to see a correction and a trader react by taking the next push to the upside. Is that okay now? All right. So if that's the case, the job of a trader is to have a skill to be able to identify which action is a good action to look for reaction, from the trader. How do you know that this action is a good action? And which part of the chart do you need to consider this action from the market as a good one? Okay, and what determines that this action is a fine one, is a strong one? That is what we want to do today, so that every time you see the condition that qualify this as a strong push, then you look for this correction, and as a trader, you can now take this, you can now react this way by taking this trade to the upside. Is that okay now? So three things you must know here. You must know whether this action from the market is a strong one or is a weak one. If it's a weak one, you don't even look for this correction in the first place. Okay? And if it's a strong one, then you look for this correction and you react this way. So I want to teach you this morning how to use RSI to determine a push that is very strong, so that as soon as you see that push, you know that the next correction to your fib level here, this one you are going to take to the upside, is going to be a valid one. All right, that's what we want to do briefly this morning. So without much talk, guys, let's plug in our indicator. We're plugging in our RSI. All right. Of course, RSI has two levels, three levels. I have three levels on my RSI. Some people, they can have three levels, 1, 2, and 3. Some people have 70, 50, and 30. But on my own setting, guys, I have 80, I have 50, I have 20. All right, this is the setting. If you ask me why do I have my own like this, I don't know. Both this setting and this setting are the same. All right, they are the same. They don't have any difference. Okay, I just want the level of my stochastic to be the same as that of my RSI. That's why I set it at 80. There is no difference. They give the same result. Okay, so let's go, guys. Now, that's the first thing you should know. So this is your RSI. The setting is 14. You look at it here. The RSI 80, 50, 20. You look at the input. The RSI length is 14. Okay, that's what is important there. Okay, so and then what is the use of RSI, guys? What do you use RSI to measure? Some guys, were taught in the conventional method of trading that RSI is used to measure overbought and oversold in the market. No way. RSI is not used to measure overbought and oversold in the market. They tell you when RSI is at 80, sell. Okay, let's test it. RSI is at 80 here. Look at it here. If it has sold here, what happened? The market is to the upside. Can you see, guys? So they say let's check another. Okay, here RSI is at the top. Okay, maybe you get luck here. You just luck, but all I'm just telling you is that RSI, guys, is not used to measure overbought and oversold. If anybody teaches you that, please run away. There is nothing like that. RSI full meaning is relative strength index, and it is used to measure the strength of the move in the market. If the market is trending up, the strength of that move to the upside is determined from the RSI. If the market is trending down, each push down you see in the market, you are going to see the extent of that push down, not only on the price, but on the RSI. Is that okay now? That is why the best indicator I use to determine divergence in the market is the relative strength index, RSI. Okay, so you have understood this. Now let's go. How do you use it to determine a viable push in the market? Of course, I told you before that I have 3 levels on my RSI. I have level 20, I have level 50, I have level 80. Okay, so what I do is that if RSI is below 50, if RSI is below 50, then the strength of the move of price is bearish. Okay, the price is bearish, supporting a bearish move. Okay, and if RSI is above 50, okay, if it's above 50, the strength of the move is bullish. Okay, is bullish. That's a bullish move. All right, less than 50 is bearish, and then above 50 is bullish. Okay, then the question is this: what is the extent of bullishness, if there is any English like that? Okay, what is the extent of bullishness when it's above 50? I want to see how it moves above 50. For instance, do you see that this is a move above 50? You agree with me? Yes. You see that this is another move above 50. This is another move above 50. Can you see it? Now, if I ask you the question between this move above 50 and this move above 50, which one is finer? I mean, which one is a fine one? That's what I mean. You can see that this one struggle to go above 50. This one here, guys, this move here struggle to go above 50. This one, without struggle, it goes above 50. Clean and clear. All right. So in the true sense of it, you will see that this qualifies as an impulse. All right. And what makes it to qualify as an impulse? Can you see that? That is why in anything you are doing, the first thing is your market structure. Do you see? It's making a lower low, lower high, lower low, lower high, lower low. What is this? Higher high. It has broken the structure, higher high. So any move that break this structure. Any move that break market structure, either to the upside or to the downside, you are going to read the extent of that break or structure on your indicator. And this indicator is the one that measures the strength of the move, either to the upside or to the downside. And in this case, guys, you are going to get it here on the RSI. You can see the RSI break the structure, but you can see also that it break the structure very weakly, very weak. All right. And that is why you see the RSI was struggling to come up above 50. But nevertheless, it has broken the structure, and all you need to do is to find a fib level, a retracement level. All right. This is a shallow retracement. I don't take this. This is just a zigzag that come to 38. If it has come to 50, fine, I will have taken it. But in this case, it came to 38. All right. So, but you can see that after coming to 38, you can see this push to the upside. Can you see? Look at this push to the upside, guys. If you see this push to the upside and you read it, come to the indicator and read it. Come and read this push on the indicator on the RSI. Can you see? Very fine push, guys, to the upside. Can you see the fine push to the upside? Yes. So this is a fine push. This is a better push to the upside. And you can see from here, the RSI make a fine move to the upside. Once you get something like this, you have to celebrate, because you are definitely going to get a retracement back to demand. Can you see? Zigzag 1, 2, and 3 back to 61.8. All right. And if you look at if you watch my video on entry rule, 4 entry rules, you will see that we're able to see the fine impulse to the upside. We're able to define the nature of correction back to 50 to 61.8. This time around is a fine zigzag to 61.8. And then we look left. You can see a powerful demand zone here. Okay, from this candle. For people that don't know demand zone, if you see a fine impulse, a very good candle, healthy one, okay, that cross a structural area, you want to look at the candle that formed before it and the candle that formed after it. In between the two is your demand zone. All right, it's your demand zone. So in this case, this is the demand zone. And you can see exactly at that level, the market make a move to the upside. Can you see? The market make a move to the upside. So the next thing you are going to look at is that is going to be a bonus for you, is that as soon as you see market has come to the structural area, you look left, you see it meet up with demand level. Okay, all you need to do now, right now, the strength is there because we have crossed above 50. All this is just a correction back to the average, and you are going to see this move. All you're going to see right here is you're going to look at the stochastic. That's a bonus for you. Has stochastic reset to the low? Yes, look at it here. That's reset itself to the low. Okay, from there, you can make a move to the upside. Can you see, guys? This is a simple way we do the trading. Simple way we do it, making use of our tools. Can you see here? I'm making use of our two powerful tools, stochastic and RSI. Okay, let me give you another example, guys. Okay, right now you have a trend here. All this one has become a single wave, 3 waves to the upside. Remember, I taught you that there are 3 types of impulse. Okay, you have single impulse, which is called a mono wave. You have a 3 waves impulse, and you have a 5 waves impulse. This is the one taught you were taught by Elliott wave. But I'm saying that this is also an impulse. It's also an impulse. It depends on where you are seeing them. Correction is not only correction that is a 3-wave structure. Impulse can be 3-wave structure. It depends on where you see it. So in this scenario now, guys, This is a three-wave structure, 1, 2, and 3. Will you say this is a correction? This is not a correction, it's an impulse because it's proceeding in the direction of the trend. So it's an impulse, guys, which we call a three waves impulse. Okay, so now after this three waves impulse, you have had this correction, 1, 2, and 3. Okay, you have this correction. After correction, guys, I taught you from the beginning that when you see an impulse, this is an action from the market. You need to see a correction. After this correction, you as a trader, you now react to the action of the market by taking these pips. The same thing is applicable here. This three-wave correction, guys, has become an action from the market. We have waited patiently to see this reaction, 1, 2, and 3, three-wave structure. And then you can see that after this three-wave structure, you have a move to the upside here. Okay, and that move to the upside, you now look left to see where it moved from. Powerful demand. The same demand level that we had this move to the upside is also having a flip to the upside at that same level. So now, how do we confirm that this move to the upside is an impulse that qualifies for us to look for correction? How do we know? That's the next thing now. You now come to your RSI. Can you see that there is a synonym? Okay, there's a resemblance between this fine impulse that we got this correction to have this move and this fine impulse. Can you see that there is a resemblance between the two? Oh, yes. But I can see that some of you, as soon as you see this impulse, say, the market is bullish. All you just do is just to click to just put buy here. No way. You don't do that. You don't do that. It's difficult to succeed with that, guys. What I'm telling you now, I was not taught from the beginning and I struggle. But you are very lucky hearing this from me, guys. You don't buy here. No. Do you see you have fine impulse already? But look at the position of your stochastic, guys. It's at the top. Stochastic cannot be at the top and you get a comfortable buy to the upside. No. Now you have a fine impulse. Look at it. RSI is above 50. That is good. So all you need to do for me is to find a retracement or a pullback or a correction. Because you already have a fine impulse, let's just do a fib of this impulse. Though we don't know where it will end, maybe at this level, we don't know. All right, that's another lesson for you. Never take a fib of an impulse if it has not finished. All right, it has to start correction before you take a fib. It could come to this level, then you look for correction back to this demand area. It's a demand area, back to this demand area. And by the time this market come back to this demand area, what happened to this stochastic, guys? It will have reset itself to the low. Okay, it will have reset itself to the low. Then you take it to the upside. Take it to the upside. Do you understand now? So right now, you understand what it means to have a fine impulse, an impulse that is very strong. How you read it from your indicator, and then you don't read a fine impulse in isolation. You have to understand the structure of the market. Are you in a corrective phase? Are you in an impulsive phase? This is what you need to understand. After you have gotten that correctly, then you look at the impulsive move to the upside or to the downside, and you look at your indicator. How strong in the is the impulse? How did it break through 50 to the upside? Don't go and use it to measure overbought. There's nothing like that as far as RSI is concerned. Let us see how it has broken into the upside. Once you get that, fine. You look for your correction back to 50 to 61.8. If it is zigzag, back to 78 in most cases. Once it has come to that level, look at your stochastic. Has it reset itself to the low? Yes. Then you pull the trigger. You pull the trigger. It's as simple as that, guys. As simple as that. Okay? So let's look for scenario for a bearish market. Okay, let's look for scenario for a bearish market before we call it a day, guys. Let's look for scenario for bearish market. Okay, let's look for bearish market. Okay, all right, yeah. You see bearish market here, guys. You see a bearish market here. Okay, this structure to the upside has been taken. Okay, all you do is to look for correction and down again. Now let's look at this impulsive leg to the downside, how ferocious it was, how powerful it was. Look at it, guys. Indicator confirming that the strength of the move to the downside is powerful. Remember I told you, if an RSI come below 50, it is bearish. All right, and then you now look at the strength of the bearish move. Is it powerful? If it's powerful, you see it come straight. Look at this one. Look at this one, guys. Do you see that this one is coming slowly? You see it's coming slowly. It's not a strong one. You see this one? Boom, to the downside. This is a strong impulse. If you see a strong impulse like this, correction back to the structural area at 50 to 61.8 will give you a definite sell to the downside, because the reason is that this pressure of the sell is here. The pressure of the sell is here. And people that mounted this pressure here, that put a big volume for a sell here, they have not taken their profit. They have not. They are seeing the market. So that is why. And all this one you see is the handwork of a retail trader. You know, the market maker allow you to push it down to the right area. They buy more. They buy more. And the pressure push it down to the downside. Can you see it now? So you can see a big impulse. You can see a fine one. You can see the correction. You can see the correction. You can see the continuation. When it is continuing to the downside, what you need to see, guys, is that, are you seeing this area pinpointed or reset itself to the top on the stochastic? Yes, look at it. Set itself to the top, exactly this point. So everything you need is there for you. Good impulse, correction, 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 and continuation. Boom, to the downside. And at the point of continuation, was there a reset to the top? Yes. So if you are taking any sell and your stochastic does not reset to the top, it may not be a viable sell. If you are taking any buy at all in the market and stochastic has not reset itself to the low, it might not be a viable buy. Just take note of that. Okay, so you have seen scenario for a buy and scenario for a sell. If you implement it, you are going to get improvement in your entry. That is it for today, guys. If you have not subscribed to this channel, just try. It doesn't cost you anything, guys. Just subscribe to it and make sure you let me know areas that you are not comfortable with from the start to the end of the video. Let me know. Just talk to me on the chat box. Just go there on the comment section. Just comment. So thing you said about so thing, I don't understand. Please clarify for me. So thing you said is wrong. It's not like that. Just let me know. Let me know. And then share the video too. Let other people, get to see it. Because the more you like, let me tell you guys, the more you like my video after you have watched it, and the more you click it and say like, that thumb up, the one that face up, not the one that face down, the one that face up. The more you click it, that you like it, the more YouTube is going to share it to many people that are looking for similar content. That is the secret. And I want many people to know the work we are doing here and let them benefit from it. So instead of spending money to go to Facebook and advertise for people to come and see our work, share it free for us on the YouTube. Let people watch it. Okay? That's good. I'm going to come with another powerful content next time. Thank you guys for watching. Bye-bye.